Netflix is what's happening.
Okay.
We had that news coming out in just the past half hour or so that Carl Icahn said he was exiting his stake entirely from the company. This coming after Netflix says it was splitting its stock 7-for-1. That move presaged by a move last month where it asked its shareholders to expand its share authorization, the number of shares exponentially. You can see the shares took a little bit of a hit when that Icahn headline came out, but they're still holding steady with a gain of 1.4%. And still, by the way, trading at a record. The history of Icahn's dealings with Netflix have been interesting. At one point, he had a bet with his son, Brett, about whether the stock would keep on going. He lightened his stake back in October of 2014, booking about an $800 million profit, but he also missed out on some of the rally. So he still had a stake, but missed out on some of the rally. They actually had a wager at that point on whether the stock would continue to go higher. At the peak of his holding, he had about 5.5 million shares. And if you look on the Bloomberg terminal and you run HDS, you can also look at the historical holdings and analysis. So the white line here is the stock price. The green line is his holdings, at least by filings of the shares. Again, at the peak, 5.5 million. He took the stake back in September of 2012. And at least, again, if you judge by the filings and look at the average price, according to the Bloomberg analysis, his cost basis per share on average $72.83. Considering the shares are right now at $6.89, that's pretty good if that's what he paid. By the way, he says now Apple is a better bet comparatively to Netflix, and there he has about a 53 million share stake in Apple. That's